and welcome to the latest Evaluate podcast. I'm Amy Brown, Deputy Editor of Evaluate Vantage.
And I'm Elizabeth Cairns, Medtech reporter for Vantage.
Since you're here, you're probably familiar with Evaluate Vantage. But if you're not, you can subscribe to our daily news emails to receive our take on the latest news about the pharma and medtech world, with Evaluate's data to add depth and context. The first half of 2022 is well behind us, and we're not far off staring down the barrel of the fourth quarter. For most in the industry, the first half of the year was a period to forget. But in the last couple of months, we've started to see some glimmers of hope. Today, we'll talk about some of those glimmers and whether they're real or fool's gold. We recently published an ebook covering the highlights, which is probably the wrong word, of the first half. And today we're going to use that as the context as we think about what comes next.
So why don't I start? IPOs fell to a 10-year low in the second quarter in biopharma. Are there any signs of a pickup so far in Q3?
Not really. There's been a couple of tiny deals. I think Maya Biotechnology raised 10 million. Another tiny company called Pax Medica raised 8 million. And there have been a couple of small unit offerings. That's like a bundle of shares and warrants, a kind of half IPO. There is a queue at least. A company called Third Harmonic filed to raise 150 million the other week. That's a phase one company in the allergy space. It's a pretty early stage company, which is perhaps a good sign that people are feeling a bit more optimistic about the kind of companies that investors are going to support. It feels like it wouldn't take much of an improvement in conditions for some bigger deals to test the waters, but there are not very many signs of that happening in the coming few weeks.
And how about on the venture front? The data appeared to show a bit of a retrenchment in the second quarter. How has private financing held up over the summer?
Not too badly. With the caveat that we're only kind of 6 or 7 weeks into the third quarter, and we have had a quick look at the data. It doesn't look like the third quarter is going to show any increase on the second quarter. It seems to have started fairly slowly. There's certainly no crossovers, as there's no IPOs. But there's still a couple of big deals. We saw Orna raise over 200 million the other week. That was alongside a big deal with Merck around circular RNA, which is a bit of a hot space. I think we're going to see more deals there in the coming months. Another company called Carmot raised 160 million Series D a couple of weeks ago. That company might have been going public in a parallel universe. I think we still have to remember that venture is still very well stocked, and they have got a lot of money to invest, and they are going to have to put that money somewhere. And so how about in the medtech space? I think we saw pretty steady funding in the first half. What sort of trends have you seen as the summer's gone by?
Well, there's been little change overall, but there are some interesting trends underneath. In the first half, perhaps surprisingly, more venture cash went to makers of kind of traditional medical devices, such as implants or robotic surgery systems, rather than digital products. And the second half is perhaps a bit more competitive. A couple of digital health groups, such as Clearly and Cry, managed to rake in 3-figure rounds. But the biggest funding of the second half went to Delphi Diagnostics, which makes a more traditional product, a cancer test, liquid biopsy. So that's still a very hot area. But all this could change across the rest of the year, as with biotech, medtech VCs are absolutely minted, and they'll be hurling their cash around over the next 4 months too. By the end of the year, it's likely that makers of both digital and non-digital medtech products will be well funded.
A different story in the M&A markets and IPOs, I believe, which fell off something of a cliff.
They did in the first half of the year, and they're still stuck at the bottom of it. There were only 2 tiny IPOs across the summer, a company called Virax Biolabs and another called Lunit, but neither went into triple figures. There was one decent-sized M&A deal that happened in July. Meridian Bioscience merged with a Korean diagnostics company called SD Biosciences. That deal was worth $1.5 billion. But otherwise, it's been pretty quiet on the merger front.
So if nothing is happening in M&A and nothing's happening in IPO, what can you tell me about in medtech, Liz?
It's all about divestments. These are a major trend in 2022 and accelerated a lot in August. GSK spun off Haleon, of course, and Bayer, its environmental science division, that's more in the healthcare space. But medtechs have been following this trend in a major way. Olympus and PerkinElmer are getting rid of their non-medtech units so they can sharpen their focus on devices and diagnostics, respectively. And the massive conglomerates, 3M and General Electric, are spinning their device segments off completely into new companies. So there will be 2 new pure-play medtech companies as of next year. What about in biotech? M&A was kind of supposed to come to biotech's rescue this year, and the first half wasn't too bad. How's that held up?
Yes, it certainly doesn't look like it's going to be a disappointing year. Bit of a slow start, but things have definitely picked up. We're still waiting for the big one. That's Merck buying Seagen. Seagen shares have come off quite a lot in the last couple of weeks, so I think it remains to be seen whether that pleases some of those investors who have been hoping for a big number there. But we ran a few of the numbers for the third quarter. Again, the caveat being we're only a few weeks in, but in terms of the kind of money pledged, we've already reached about almost half what was pledged across the whole of the first half of the year. A reminder that we only look at developers buying developers in this data, but I think we got up to 30 billion in the first half, and we're already at 13 billion in Q3. So that could be a bit of a good year, particularly if Merck gets its checkbook out.
Great. But a lot of the deals we have seen are kind of lowball offers or takeouts of what are basically distressed companies. Is that showing up in the data yet?
It certainly is. We also had a look at the M&A premiums the other week. Our glamorous data assistant, Edwin Elmhurst, we've seen a couple of really low quarters. I think in the first quarter, the average premium, this is the 30-day premium, that only reached 30%, and we've been up in triple figures in 2021 and before. Again, the last couple of weeks we've seen a couple of really good premiums. I think Ipsen buying Epizyme, that was a good one, and Regeneron buying Checkmate, they were pretty kind of hefty premiums. But we are definitely seeing some pretty low ball offers, and they are being accepted, more importantly. So I guess the other big indicator that we look at when we're taking the temperature of the sector is regulatory approvals and what's going on in terms of actually getting these products to market. In Medtech, are you seeing any standout trends at the FDA? They're the one that's the one that everyone watches.
Yes, true. During the first half, there was a bit of a slowdown in the number of approvals for innovative devices. Alarmingly, over July and August, the pace seems to have slowed further. Just 6 devices got a first-time PMA or a de novo 510k clearance in July and August. Perhaps this is just because it's summer, but if the agency is going to finish the year with any kind of respectable total for approved devices, it is going to have to put its socks up.
Yes, and I think we've certainly seen something similar in biotech when people have been a bit concerned about the drop-off in the first half. I think by our calculations it was the slowest half since 2019. Again, might be a bit too early to be getting too concerned about this. I think there's been a lot of complete response letters because of the pandemic stopped the FDA being able to inspect a lot of particularly foreign manufacturing sites. I think if it ends the year low, then perhaps investors will have something else to worry about. But yeah, that's something we will certainly be keeping an eye on as the year continues.
Okay, well, I think that wraps up our conversation for today. If you've got any questions or thoughts on what we've discussed, feel free to drop us a line or find us on Twitter, where we are at Evaluate Vantage. Remember to subscribe to our news service if you're not already, and thanks for listening.